Morning. We'll give everyone an opportunity to spool up here. Last full week of July. Insane. Time really flies. What a stinker. I guess unless you are a fan of Spain, what a stinker that World Cup final was as far as I was concerned. Probably one of the reasons why I don't love soccer. Just no scoring. But and then at the end, they sort of came on. I think Argentina misplayed that. Not that I know anything about soccer, but they looked like they had the ability to score. They just didn't try all game. So I don't know. Anyway, markets overnight continue to print positive inflation numbers for bonds, a bunch of misses overnight. Stocks mixed. Here on shore, we're indicating better across the board. The VIX down 3.3. Commodities finally opening a day with possibly a drop in the price of oil, although mixed. Brent up slightly, crude down slightly, both over 80 though. Copper, silver up on the day, dollar mixed versus most currencies, Bitcoin up. So let's look at MBS and bonds. 10 sitting at 456. We're up about 2 basis points. Good morning, Todd. We're up about 2 basis points across the board. MBS down about 4 ticks across the board. Don't necessarily love these levels. That being said, when you look at the screen today, what you're seeing and you're absorbing is the drop on the roll more so than the market being down. That being said, what you like to see when we roll is that the market absorbs some of this drop, right? The roll is a very interesting thing. Good morning, Bob. Is that, we're saying, and granted, I'm oversimplifying because there's a carry assumption, at least as it translates to maybe rate sheets or when you trade these bonds in the secondary market, there is some carry assumptions. But I always find it to be interesting that, for example, yesterday, the contemplation is a July security is worth X, or I should say in August as it were, because now August is front month. But tomorrow it's worth Y, and you'll normally find over time, depending on the directionality of the market, us absorbing that roll or not, and that's why sometimes you might even see a negative roll. Not all that common. I gotta believe that this struggling with these calendars for some reason, and I don't understand really the timeliness or lack thereof. I'm going to just put the week of 7/20. These calendars seem to be behind. I'm going to use Market Watch for a second here. So yeah, leading economic indicator, and nothing. It's crazy because this just Market Watch actually has less on the calendar this week, as crazy as that sounds. So what I've got, if I kind of triangulate today, we just have leading indicators at 10, not a huge mover. Tomorrow, 8:15 ADP weekly. Going to really be interested to see if that prints under 20 2 weeks in a row. I think as we build back up to non-farm next Friday, a couple of sequential sub 20,000 numbers on ADP weekly could bode well for ADP on Wednesday and non-farm on that Friday. Wednesday looks like not a heck of a lot. Thursday, always going to get claims. And Friday, some S&P and some home sales. Yeah, just about every calendar that I am looking at. Okay, so the trading economics definitely has a more robust calendar. Looks like Chicago Fed on Thursday at 7:30. But yeah, for the most part, a fairly quiet week. or that would be 8:30. This is an hour behind. This must be home prices next Tuesday. Richmond Fed, Dallas Fed. We've got Fed decision next Wednesday, going to be another interesting one. And then next Thursday is in some ways the headline of the week, right? We've got first look at Q2 GDP and the PCE that comes along with it. So that's going to be pretty interesting. And then Friday, we're going to have sentiment. So were we pushed out? Yeah, all the way until, wow, we get it late. August 5th is ADP, and August 7th is non-farm. You know, what we'll see a lot of times when the last day of the month is a Friday or you know, something like that, a Thursday, a Monday, it's not uncommon on the odd occasion to get these numbers actually at the end of the month prior, but not this month. So some really, really, really late data. So what do we do today? We're a little, you know, we're ticking slightly positive. Stocks are going to be interesting. The overnight might see a little bit of the flight to quality that we've been seeing. Morning, Frank. But stocks here on shore are going to want to look more risk on. I sure as heck hope that you guys are locked up for July. To whatever extent you're not, going to really reiterate the last week or so, which is 6 coupon, which is 6 1/4 to call it 6 3/4. To me, that's full on lock. The 6 1/2s have been cranky. There's absolutely no doubt about that. And that was a pretty wide drop. So I continue to be 50-50 there. I'm sort of 100% float because there's not a heck of a lot of risk on 6 3/4 note rate and up, but I'm sort of 50% locked just because they've just been uncooperative, I think, more than anything. I think 5 1/2s, again, similarly are a 50-50 proposition. There's some value in that chart, but not tremendous. So if you've been floating 5 3/4 to 6 1/8, I think that basically if the loan's funding in the next week, it's maybe time to give up and just sort of, you know, take what you could get. I think if you're talking middle of August, end of August, I don't mind you being more 70-30 float lock. Listen, I don't have a crystal ball. What I can tell you is that outside of the price of oil, the data has absolutely been more accommodative for bonds across the board. I think there's merit when you look at the calendar, and I've talked about this a lot, that July, August, September tend to be very bond-friendly months. I don't know that this year would – I see anything to give me the indication that this year should be different. Listen to the words, not will be, should be different. Wild card is certainly oil and Iran, but the data to me is pushing us in a direction of slightly lower rates. So I don't mind taking on some risk, particularly when the chart drives it. There's no reason to take risk 6 1/4 to 6 3/4 note rate. Those levels are, you know, at or around 1 month, 3 month, 5 month best levels or whatever it is, you know, dating back to, you know, end of February. Even if I knew for a fact rates were going down tomorrow, I probably still lock those note rates because I'm not making such a call that, you know, if you're at 6 5/8, that somehow you're going to be pricing in the 5 coupon anytime soon when we see those gap down in rates. I don't see that coming. 5 coupon, there is zero value there right now. And that to me, just purely on a chart basis, makes your best case for a float. So that's how I see it. Really, not a heck of a lot more. I think what we're going to do at some point this week is actually move us to 828, get us a little bit closer to the 830 data point. Just a quick refresher. I'm going to start trying to keep these to about 5 minutes, maybe a little bit more, simply because we're far enough into this that I don't believe that I need to kind of explain every little detail. It could be more what originally I intended this to be is sort of our call in the morning is, hey, I already have the position. Let's do this. Let's do that. And half the times I'm just actually sending a message in Teams, or now we use Roam, and just saying, cover this, lift that, get a bid on this. Unless it's a really, really, really big day where we want to talk through like a non-farm perhaps, or a CPI, those I see maybe being longer episodes. So give you an opportunity here. If you have any questions or anything you want to say, please post it. Otherwise, sort of without knowing exactly where everyone struck their rate sheets, I'm going to tell you, you are probably two ticks, 6, 7, 8 basis points worse than Friday's rate sheets on most coupons. Might be more like an eighth down in coupon. So, if you took some risk into the weekend, you guessed wrong on that. And you may want to look at covering depending on when the loan is funding. So as always, thanks for joining live, watching on replay. Remember, bulls and bears make money, pigs get slaughtered. Have a great day. Let's crush this last full week of July.